You know what? Before we get into gold still being boring, and that's going to be the whole gold segment. Let's just not even talk about gold on this one, right? Gold is still boring. It's kind of at 1800. I still think it's setting up well. That's my take on gold. We have to talk these meta stocks. I joke that people got their meta ass handed to them. Somebody learned them something this week. It was not pretty. I mean, when I see Facebook down 23% after market, and then the very next day I see Snap up 25-30%, on some earnings beats. The Dow, the S&P, and the NASDAQ is starting to trade like a junior. And so at that point, if it's starting to trade like a junior for investors and speculators that are risk averse, why wouldn't you take a little bit of that capital and start rotating it into some of the better junior names, or even some of the majors in the commodity space that have these really robust supply demand fundamentals and value propositions that you can measure? It's a little bit harder with the juniors if you're not into the exploration stocks, but it's a lot easier with, the companies that you've mentioned before, some of the Kinrosses and the Camicos and, these producing companies that have real numbers attached to their balance sheet. I'd love to hear your thought, because I know that you're sitting on a cash position that you've been deploying very strategically here over the past several weeks. I'm curious to hear if you did some more of that this week. I know that you were savagely trading tech stocks short and long.
Well, let's start there. Not just meta stocks. I mean, it was tech stocks that have had a relatively bad week. I mean, the NASDAQ was selling off hard earlier in the week, and you're in that phase now where investors aren't responding to news the way they responded to news for the past year. So I'm going to take it back to the crabs for a second. When the crabs were expensive a year ago, and started saying they're not expensive because there's fewer crabs, and they're not expensive because people are buying more crabs, they're getting more expensive because there's inflation in the system, and people were pushing against that narrative, right? And then we had the pushing against that narrative for a while, saying it was transitory. So we've been saying that earnings weren't going to be so good, in that, yes, they were going to be good. Earnings growth was going to be good, but that rate of change was slowing down, right? And I was telling you that people think linearly. They think what happened before was always going to happen. So a tech company prints good earnings, stock goes up. Except that doesn't happen now that we're not in the same sort of macro environment, right? And so
the world is a circle?
Yeah. So that's what I'm starting to say. Like the investors are responding negatively to these earnings. And furthermore, when a multi-billion-dollar company goes down 20% in aftermarket trading, that's telling you that's not a safe environment to be in, right? And part of that is the VIX is still elevated, but more than that, it's the market pricing in the slowing down of earnings growth and the slowing down of growth, period. And so just like people were saying, no, it's not inflation, I see a lot of articles now, earnings growth is still 25%, right? And it's the same exact thing. It's like, yes, but. And that yes, but, it can make you a lot of money, just like if you bought the inflation trade over the past year, right? Here, that yes, but is getting cash, which we've talked about, buy gold, which I've done. So not only was I buying a little bit of bonds this week, but I was buying the old GLD, right? I mean, I was flashing the cash in the GLD. Why not, right? I mean, I think gold's going to go higher, especially buying on dips below 1,800 at this point, I think is okay. And then you asked about the majors. I was looking at them as well. I mean, look at AEM. I mean, pull up that chart. It's only $1 or $2 off its 52-week low, for example. And it's getting ready to acquire Kirkland Lake. And so I own those shares as well. So ultimately because I knew they were going to become Agnico shares eventually, right? And so, yeah, I'm buying companies like that. Yeah, I think the safe stuff. So bonds, gold, cash, and then there are companies that are still going up. Like look at a chart of things that are related to like agricultural commodities, for example. Look at like Mosaic or Bunge, BG. Like those stocks are still near 52-week highs. General Mills, for example. And so you can be a little bit defensive and start to look at dividends, but really, if you want alpha, or if you want things that are going to go up in this environment, it's gold. And I think yields, though, bonds, though yields fucking spiked right at the end of the week here. We'll see how high they get.
The bond market tends to lead. It's an interesting bond market right now. As you know, I always watch that. I look at German yields, and those are as high as they've been in quite some time.
Zero?
So something to keep in. Well, when you're coming from a baseline of negative, whatever it was, yeah, they're up there. So it's interesting times for sure.